So yeah, the strategy goes something like this. It uses just one indicator, not even an indicator, just the triangle. The triangle, I look at 3 points of the triangle. So the 3 points of the triangle are these 1, 2, 3 points of a triangle, and then it's got some sensors, like this sensor here, and then it's hold this sensor here where it breaks, and then here where you stick out. So the triangle, all I need is to get the base first. When I get the base, then I get the 3 points of a triangle. That gives me my trading strategies. This is the whole lot, but I'll break it down to seconds. This is her strategy blueprint. So the daily base, the opening candle is the daily base. The candle that goes over the line that separates daybreak between yesterday and today. That candle is our daily base. This is the candle we respect. It sits on the daybreak line. If the candle don't make sense, there is one above or below it. So for now, we see there is a transparent crossover candle, and then there's one above it. Okay, so the price action, if we look further to the left, okay, that is on the blind side. But let me just now highlight the daily base. This will be the daily base. Here is our daily base. This area is our base. We highlight it with gray. It shows that this is the area that is the base of the day. So the price action reacts to the base. Like you see here, in the morning, in the first hour, we had a level down, and then we came back to base. Now the base shifted a bit up because you see this candle confirm that the actual base is this base. So we shift from this base to this base, and then the whole day this is the base that will be respected. So price action reacted when it came back to this base, but it wasn't enough because it had to go to a new base that is confirmed by this week. Yeah, that's what it is. Yeah, there is the reaction of that base to prove that it is a true base. Another point we look at the first low we take when we go from base, the first low and back to base, drop, base, and rally. That first is the level. That's a level. You call it U for now. 2 levels later, this level that doesn't go back to base, and another level is a W. So it's a UW. We're trading UW in, and we're trading IM in with the wedge. You see this as we develop. The second icon is counting levels. So that's how we count the level. A level, go back to base, and another level, go back to base. That is how we count levels. In a series of black candles, the level is when there's a series of black candles, and then suddenly there is a white candle. And then from there we count the level. When there is a series of white candles and then the black candle just pops up, that's where we count a level. So now the triangle is the third icon. This triangle here, the purple one, is our third icon. We put it at the bottom of the base, and then we extend it past level 1, to level 2, and then we cross it. We put it across, and then we trade this area that protrudes below our wedge. You will see that if we plugged our wedge right, price action broke above the wedge and it came back to wedge to give us another opportunity when it retested to react by going twice to the base. It connects to the bottom of the candle, and then level 2, 1, 2, and then you flat it out, meaning you hold it straight so that it is straight. Price action will come because you will make this most after 2 levels. Then when price action comes, it will give you the third level. You trade the third level. This railway tracks is a reversal sign, or you wait for price action to go back inside the level 2 wedge, and then you can trade from here up to base. We take our profit at the base. We trade level 3, which is this one. We wait for price action to close inside this level. Okay. Another point we talk about here is the Y base. This base, let's call it a D base because it's a daily base. And now there's there's a base that will sometimes come before today, yesterday. The base is not static. In a day it will be static, but then you will find that you come to a price action and there's already action that happened yesterday. So we go back and see a Y off center base, which is a base that is before today. Like in this case, price went up 1, 2, 3 levels with that stick out. That's still 3 levels. So we have a right to say that base completed the reversal cycle before our opening hour, our office open hour. But nonetheless, we can shift our base strategy to the left, but still the entry will be the entry at the base. That will be the entry at the base because the reversal just came just above our base, but the entry will be at the base. So we introduce now the Y off center base. And the next thing is over here, the off center base. And the next thing, the base of her strategy. So this is how we place it. We find the base of the day, and then we let this first, we're not here, the office hour is not open yet. We let the first level slide, the second level slide, and then we look for the third level. Remember, this level 2 might not go back to base, or this base even that is created by level 1. So level 2, between level 2 and level 3, the base is higher. Sometimes it doesn't come back to the original base. But then after this high, then we put our triangle there, and possibly make it run on this first low that was attempting to come back to base. So put it this point, this point, this point, that's all you need. You send it across, price action is going to go above, and then we're going to trade above, coming back to base. Yeah, these are the levels. Okay, the triangle will fit in once we have level 2. The triangle will fit in the top level, and it will fit in the level 1 back to base. Okay, and then the next thing is we call this the Luanli effect and the strategy. We trade two things. We trade the reversal and we trade pullback. Reversal and pullback. So let's look at the reversal. The base, like we said, is the opening of the day, and then we count 2 levels. Here in this case is 1, 2, and then on the second level, let's just go to a bigger picture here. Yeah. So now here's the day open. This one is the yesterday base. How do you know it's a yesterday base? When we consider our daily base today, we didn't even have to look at that base until price action react on that base. Then we know we have a base. Then that would be our yesterday base. So here we are. We had the base and we had 1 level down. Just at the open of the day, we had 1 level down. And that's from this 1 level down, we went up. A series of rallies not returning back to base until we break a trend. Then we know we have a level. This one was a guideline for our trade, for our trend. When we break a trend, it's a level. Or if you count 1, 2, 3 plus M, which is a reversal, that counts for a level. And then anything higher than level 1 is level 2. And then we wait for level 3 to come. Level 3 then will be, we're looking for a reversal sign. That reversal sign at level 3, that's what tells us what how to trade. Like in this case, price action went above level 2 just a bit, and then it gave us a reversal sign. This is also a reversal sign, so you can sell here in this case because we opened and rallied. If we opened and dropped, then we would look for buying opportunities. Now we opened and rallied. That means the day is pulling back because the yesterday was bearish. This day we're just trading the pullback. Then we're gonna go forward with the price. Okay, now comes this in. We wait for this sign on the level 3. We look for the star sign. There's the star sign, and then we enter next door. There's even another doji, and then we'll trade the next one. So from here, price action would have gone down. Let me just highlight this one. Yeah, this one. Then you would have traded this area after 3 levels, 1, 2, 3 levels from our base. Then you would have traded this area, drop, base, drop. At the base, you take profit. So now that's the first half of the day. If it happens that this happened before 9, then we come and open office at 9, and then at 9 we find the price action below. Then we see we missed an opportunity here because we pulled back 3 levels, and then we missed the opportunity of going back to base. Now we're looking below the base to see if we can have an opportunity for reversal. This was pullback. We trade reversal. If this is going to be reversal, then we're going to see at the bottom if the reversal is going to give us an opportunity. Same thing you do. You take the triangle, you put it at the bottom body, lower body of the base candle, and then you count levels. 1 had happened at the open of the day. Now you get level 2. And then you put the triangle between level 1 and level 2, and you put it across and you flat it out here. Then we trade level 3. In this case, we had a fake out because price action came back in, and now we have the radius of our triangle is giving us opportunity to buy. Now we buy back to base. Now the base is broken. We're sitting above base. So that was a break of structure. So now we go look for opportunity for entry if this was a break of structure. Then we wait now at the level of this shoulder. The shoulder, the head, the shoulder, waiting at the level of this shoulder to give us the head and shoulder. Shoulder, head, shoulder. At this zone, when we come back to, because we first broke structure, when we come back to the right hand shoulder, that is where we trigger the action. We hold rally, base, rally, because we held here, drop, base, drop. Now we're going to hold rally, base, rally. Fortunately, we take profit at the base. Yes, of course, this is proven to be base because price action reacted to the yesterday's off-center base. So now we take profit at the base. So we're trading from base to base. But the price action pulled back and it went past. But we've taken our profit here. We had 2 opportunities. Every day should give us 2 opportunities. Sometimes if it doesn't give us 2 opportunities, it's going to give us 1 long opportunity a day. And now, then, if I may just recap on on what happens, is this. So if I can say it in less than 2 minutes, and a child would understand it, that means I understand it, you understand it, everyone understand it. Somebody wise said, if you cannot explain it to a 6-year-old, then it is vague. So price action will come to, at the opening of the day, we will have a candle that overlaps between yesterday and today. That candle is our base candle. And then we wait for 2 levels of rally or 2 levels of drop. And then we put our triangle between the side where the price action is going. We put our triangle at that body of that candle, base candle, and then we go past level 1 to level 2, and then we flat the triangle top out, or we flat the triangle bottom from level 2 across. Anything that comes below, we trade that. If we don't see an opportunity to trade it, and then what we do is we wait for the right hand side. On the same flatted side of a triangle, we're going to have a shoulder there, like head and shoulder. So the part that sticked out was level 3. Then we're looking for a shoulder on the right hand side to go back to base. All right, there will be two bases, the yesterday base and the today base. Yesterday's base is off center. The center base of today is the basic center for the day. That's how we trade it. So yeah, now we can go back to the okay, so let's look at different setups. Here we started here at the base. This picture, do I have this picture? You would ask, how do I know? This one. You would ask a question, how do you know a pullback and a price action? It depends on the direction of a price action. If a price action was coming from the top down here, and then we know we are looking for, if the reversal had already happened, we're looking for continuation. If you look nicely, you see the base candle was here. This candle placed the base that we can highlight that this our base is lifted from the original base to this base, but price action doesn't come to that base. So this time it came twice here. This base is confirmed because it had landed and then it marked the base and it visited the base. So now we're expecting the price action to come the third time and get a reaction of a possible buy, because obviously our base has lifted up. Another indication that we will trade continuation in this, like in this case, we had 3 levels of rise. Price action did not go back to our base. Instead, it made the 4th level. That's where I put the red flag. This is the red flag. Well, this is a strategy for her, so I'll put the red shoe. This is the red shoe that we are not reversing, we are continuing. Then we wait the price for action, for price action to come back to base. When we trade in a back to base, we need confluences. Every trade that we trade, we need confluences. Two things. There must be either a base or resistance or support plus a triangle. The action must be on a triangle. Like in this case, the trigger point came here. We have the base and then we have the triangle. And that is why we buy. So we try to make all our trading to have the confluence, to have 2 reasons for us to buy. If there is not 2 reasons for us to buy, then we skip that opportunity. It's not an opportunity. So yeah, so this olive color, it indicates a base that is lifted off the base. This is the base of the day, but you have a new base now that is lifted off the base. So price action comes to this base, 1, 2, 3, and then we know we're going for a reversal. Or you say 1, 2, 3, because this was higher than this high. So this, if this high, initial high is the level, then anything that breaks above it is another level, and this that break above it is another level. Then this lifted. So now there's 3 bases: off center base, the day base, and the lifted base. Yes, those are 3 bases. So we trade drop, base, drop, and then we trade from here. We trade rally, base, rally, and we hit our take profit. That's how it's gonna be. That is her strategy.